Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. This is a Monday, the 17th of August. I'm Nadine Blaney, and boy, was it a busy day in terms of reporting season. We are really getting to be in the thick of it. I'll get you across some of the results in just a moment, but I would say this. Look, each and every day we're speaking with company CEOs, and it's really one of the best parts of the job, I'd say, and also I think can really help inform you as an investor. So if you've missed out on any of the interviews that we've done so far this reporting season, you may find them all at the top of your screen. Go to Series, and there's something called CEO Insights that you should be able to catch up with them all, one of which was Audinate. I spoke with its CEO today. Shares are up by 11.25%. So yeah, some pretty severe share price reactions to some of these results coming through as well. Okay, let's though get to the market. It has not been a very good day. That's the CIBO Australia Index. The S&P ASX 200, as I was coming in here, was down by about 0.5%. So over the past week or so, we've got the market overall down by about 1.8%. So really sort of moving away from those record highs we were touching in the previous week to that. Still though, holding above 9,000. I will get you across the close for the S&P ASX 200 in just a moment. Let's get to some of our themes, one of which was retail checkout. We've got some of the retailers really sort of falling out of favor in line with JB Lo-Fi is what our producer called it today. And that is because it did make record sales. However, it's talking about lower spend coming through. It's talking about a slowdown in the last quarter of the financial year, and also the trading update showing like-for-like sales in Australia down by 0.5%. So lots of concern about the consumers right now. And Dr. Copper. So copper heading towards record highs as supply tensions build. And we have BHP reporting tomorrow. That featured on the call today. And of course, copper is the real standout story when it comes to BHP these days. Okay, sector-wise, 9 out of the 11 sectors are lower. The biggest hit coming through in consumer discretionary, and that talks to that retail checkout. Wesfarmers off by 3.7%. That was on the call today. JB Hi-Fi was the stock of the day. Lovisa down. Harvey Norman Super Retail. You can see it was just a pretty terrible session for those retail names. Accent Group, well, there's a surprise, up by 1.5%. Here we go. Here are the miners. So the miners were a bit of a counterbalance to all that negativity in consumer discretionaries. As a whole, they were up by 1.5%. Really looking forward to hearing from BHP. Fortescue was mentioned on the call today as well, if you're interested. NAB, we had its quarterly update coming and absolutely smashed on the back of that, down by 5% to $39.20. So third quarter cash profit for NAB rose 4% to $1.83 billion, but it joined the chorus of banks talking about mortgage applications being down. NAB says by 15%. The bank is also warning of uncertainty from higher rates, the budget, Middle East conflict, talking about rising provisions potentially needed in the future. And that cash profit came off the back of lower credit defaults. BlueScope Steel, its full year net profit surged more than eightfold to $802 million. It's expecting first half FY27 earnings of between $860 and $960 million. There's JB Hi-Fi. You heard the details. Margins coming under pressure. Shoppers pulling back. A2 Milk revenues rose by 12% to just shy of 2 billion New Zealand dollars, though profit fell after supply shortages in China. $300 million special dividend being paid, and it expects sales growth to return in FY27, but it didn't really help its share price regardless. And Horizon, so its net profit rose 19% to $362 million. AZJ is the ticker code for that one, by the way. Underlying earnings reached $1.72 billion. It also signed a new contract with the BHP Mitsubishi Alliance. I spoke with its CEO. I think you would have heard that interview if you were watching previously in the 3 o'clock hour here in Sydney. So yeah, you can check that out online if you'd like the details. Lendlease swung to a $749 million loss, hit by costs, impairments, and provisions in its capital release unit. Longest turnaround, that hasn't really turned around yet. Really disappointing for shareholders. Iris saw its first half net profit nearly doubling to $32 million, but failing to impress investors as it too continues its transformation. L1 Group, bit of better news here. Full year underlying net profit nearly doubled to just shy of $189 million. And as I mentioned, Audinate swung to a $3.6 million underlying loss as it increased spending on product development. However, it expects sustained revenue growth and a return to positive free cash flow in FY27, shares up by 11%. But again, shareholders in Audinate have been long suffering. All right, it is a Monday, and so I like to start the week with David Scott from StoneX, get a top-down view of what's moving markets. Look, you know it. We're pretty obsessed with reporting season here, Scotty. But, we started with a bit of a negative lead-in from Wall Street. Retailers reporting slowing sales. Consumers there apparently pulling back, I should say, as well.
Yeah, mate, great to be back. And you're right. It's a very, very hectic period at Ausbiz there in reporting season. You're doing a great job, as always. And you're right when it comes to what's going on in the retail space, not only here in Australia, but in the United States as well. That retail sales report in the US was a big shock to the system. Now, the data had been moving in that direction when it comes to more broadly undershooting, but a big 0.6% drop. The control group down 0.4%. When you put that into the mix, the US economic exceptionalism story certainly looks to be starting to wobble a little bit at this point in time.
Yeah, okay. So when you are thinking about the impact of the consumer in the US, it's massive, clearly. When you think about petrol prices or gas prices in the US, they have an immediate flow through to consumers there. Is the situation in Australia any different when you think about, the budget trouble, the geopolitics, the economic slowdown that we're experiencing here?
Not identical. There are some common threads between the two, but certainly when you look at what's going on in Australia, there are some idiosyncratic factors that are happening right now. The first of those is that you've got the RBA, who has been hiking rates earlier this year and is still threatening to go and hike rates again. Inflation doesn't get back to a pretty timely manner. And then you've got the housing market as well. The housing market has been very, very weak recently and accelerated declines across the country. And that's the biggest store of wealth for many, many households. So when they see that going backwards, it's probably natural to go and see that people are looking to go and tighten the purse strings a little bit. And I think we're seeing that in some of the results that have been out recently.
Yeah, okay. So what do you think that this means in terms of, the overall index? I mentioned we're down by about, I think I said 1.8% over the past 5 trading days. Like, is the ASX looking a bit wobbly to you?
It certainly feels wobbly. Whether you talk from a fundamental perspective or from a technical perspective, you talked about the record highs that were struck only a couple of weeks ago, but then we've had the banks come out and not really surprising updates that I've been that I was expecting very much what they've been saying, that mortgage applications are dropping off a cliff. We know that's because of the budget. We know that's because we've got high interest rates. So when you put that into the mix, on top of that, the report that came out today from JB Hi-Fi wasn't great. And again, it just shows you that cyclical side of the economy is really starting to get impacted there. So when you look at what's going on with the ASX, it does feel like the path of least resistance now is to the downside. I'm not talking about a dramatic pullback by any stretch, but at the same time, what's going to justify keeping to go push up towards record highs again? Earnings don't seem to be really playing ball at this point in time. So at this point, it's got to be valuations, and that's not really helping as well, given what's happening with the RBA.
Oh boy, it's a complicated picture out there right now. And then you throw in sort of, what's happening in terms of midterms in the US. You've still got the war in Iran, and you've got Fed. So we'll get some insight into the Fed with minutes in Jackson Hole coming up. How is all of this impacting the US dollar?
Yeah, the US dollar is really interesting. Now, it's been known for having that exceptionalism tag and attached to the economy economy. And just going back to what we're talking about, that retail sales report, just the longer list of what we're seeing at the moment. And I was just doing some back testing, some analysis of what's been going on with US data surprises relative to what's been going on the US dollar index. And you can see there up in the screen, we've got a rolling 20-day correlation. So pretty much what's been happening over the past month between Citi's economic surprise index and what's been going on with the dollar. And if you look at what's been happening with data surprises in the States, they've been shearing off a cliff. Now, the US dollar hasn't done that yet, but it is looking very, very heavy at this point in time, and it's approaching a key technical level at 99.5, which has acted as support in recent months. But if that breaks down, look, there's not a lot of technical support underneath that. Now, sounds bad for the US dollar, but that's a fillet when it comes to the likes of the Aussie dollar, when it comes to metals in particular, commodities, gold, copper. You talked about getting record highs, very close to it. All of that is a factor, not just what's been going on with those particular metals, but more so with the US dollar as well, is a big factor behind that strength we're seeing.
Okay, so you reckon that gold could continue to rise? I mean, I talked about copper being quite hot. I suppose iron ore has its own headwinds when you consider how the Chinese are cracking down and really sort of playing the hard game in China over iron ore, yeah?
Yeah, and more so the China's economy as well. I don't even know, the data dump that was supposed to come out earlier today was delayed for some reason, which always raises a few question marks. But yeah, iron ore, obviously, a big input when it comes to the residential property space there in China, and we know that that is very, very weak. We know that when it comes to infrastructure investment as well, has also been very soft. So from a fundamental perspective, it's difficult to go and see those tailwinds picking up to go and help iron ore. But you're right, when it comes to other metals, gold in particular, if you go back a couple of weeks ago, it had a massive move, like a really, really historic large move given the circumstances. And it's been consolidating at the moment around about 4,400 an ounce. But I do really like gold in this environment. You've got real yields are very elevated, but that's not really being a factor. The dollar's coming off the boil at this point in time. And you've got central banks that are backstopping it, looking to go and buy. So you put that into the mix, there's worse places to be than precious metals and gold in particular.
Okay. Now let's talk about what happens here this week. We get jobs data on Thursday. How influential do you think that will be when it comes to the RBA's thinking? I mean, did you read the decision last week as soft as many others did?
In short, no. Of course, if you go and look at the forecast that were released alongside the actual decision in the SOMP, you saw that inflation, core inflation, was revised lower, upward drift when it comes to the unemployment rate. And so a lot of people immediately said, "Oh, look, that's with less hikings, less tightening priced into the curve." So the RBA is turning a bit more dovish. The way that I look at it, by what they've done in particular with the unemployment forecast, they've made it basically like they are almost essentially a single mandate central bank, which is inflation. So if inflation doesn't come back down, and if we start to go and get prints in the trim mean reading above 0.8%, which is what they're forecasting over the next couple of quarters, look out. I suspect that the tolerance for high inflation is wearing very thin. And I get the feeling that whilst I suspect still that they might be over, the risks are skewing towards that I might be wrong there. Not for the first time, obviously.
Yeah, that's interesting take, because so many were saying that, we're done and dusted now in terms of the potential for interest rate hikes. So what do you think is going to be the clincher? Obviously, it's inflation, right? But what are the other sort of pieces of the puzzle? Because, I mean, housing is not the RBA's mandate, but they've got to be conscious of, the doom and gloom headlines out there as well.
What they say in public, I suspect, is quite different to what they're saying in private. And it's everyone knows that when it comes to the housing market, is a very important piece of the jigsaw puzzle for the Australian economy. And when you see accelerated price declines, albeit from record levels, it has to be added, people are going to feel a little bit nervous about what's going on. So that's one of the big fundamental factors why I suspect the RBA is done. The housing market is rolling over. Activity should roll over with it, you'd imagine. But that's not necessarily enough at this point in time, at least in the public sphere, to go and suffice the RBA. So we start to go and get some hotter inflation prints. We get some monthly ones coming up over the next week or so. That will be very, very interesting to see how the RBA's reaction function has changed, because I suspect it has changed as a result of those forecast parameter changes that we saw last week.
Okay, really interesting times. Scuddy, appreciate your time today. Thank you.
Have a great afternoon. Take care.
You too. And the conversation sort of ended where it began, talking about consumers and consumer sentiment. Our stock of the day was JB Hi-Fi. I spoke with Zach Rios from Banyan Tree Investments and Raymond Chan from Morgans.
Right now trading at 14, 15 times P multiple, which is not sort of thumping the table cheap, but it is giving you a yield of 5.5%. So there is some interest from our perspective, from a dividend perspective. But I think you may just want to see this sort of wash out through a little bit longer. But I certainly am looking at JB Hi-Fi more as a buying opportunity, neutral, but with the buying opportunity in the coming weeks or months.
JB Hi-Fi, they are selling entirely third-party product. What it means is they're price taker. If they're price taker, if there's a new wage law passed in, if that be the case, that certainly make it harder. So if they don't grow their sales by high single digit, it's hard for them to see profit growth. So today's the outlook will certainly lead to some sort of consensus downgrade. We have accumulation recommendation on the stocks at the moment, but with today's fall, I certainly make the stocks a little bit more interesting. I think around the $65 mark may certainly be more interesting for JB Hi-Fi.
So not an overwhelming amount of love for the whole retail trade on today's edition of The Call. There was a number of blue chips, some of which are reporting even tomorrow. Featured on that episode, you might want to take a listen or give it a watch online, ausbiz.com.au. Let's look at some of the market leaders. So totally away from reporting season. I think that's interesting because we have sort of come into this reporting season with a few notches on our belt, some wins. But today, Mesoblast is really in focus after it completed a phase 3 trial for one of its products. So that's up by 10%. Hyperion X, no news. Predictive Discovery on there, no news. Catalyst Metals, no news. Obviously, we talked about the gold price there, but Electro-Optic Systems as well, up by 6%. Can't see any market-sensitive announcement coming along with that. And then you switch the page, and guess what? It's all about reporting season. So Iris off by 12%, JB Hi-Fi down by 11%, Horizon down by 10%, Lendlease swinging to that loss, down by close to 12%, Super Retail falling in sympathy with JB Hi-Fi, you've got to say. Okay, so let's look at the small end of the market. Synlait Milk is doing really well. Australian Clinical Labs, it reported, it's up by 15%. Let's take that and take it as a win. Let's flip the page though to see what did lag the market in the small end. Skin Candy down by 10%. I spent a bit of money there recently, not helping things I can see. $2.46 is the closing price for that. Tonight, we get Chinese industrial production for the month of July. We also get inflation out of Canada. And if my people on the ground are anything to go by, things certainly aren't getting any cheaper there. Okay, let's get to the earnings tomorrow. Big day. BHP, CSL, Pro Medicus, Cochlear, Hub24, and we get the Westpac Consumer Sentiment Report, which also will be really interesting. All right, final figures for this local market. So the CIBO Australia Index, I think, as you know, as I've said previously, closes sort of right at 4. We usually have a bit more trade going through the S&P ASX 200. It closed lower by about 0.46%, 9,073. It's down by 1.73 over the past 5 trading days. 9 out of the 11 sectors were lower. It was just materials and energy that kept their head above water. So big day tomorrow. Get your rest, get your stock watch list ready, and we'll get you across all you need to know. We are live from 9:45. Have a good evening.